I'm Emma Sutherland, clinical naturopath, author, mum, and your host today. With over 20 years in clinical practice, I've helped thousands of women and their families transform their health using evidence-based integrative strategies. I'm deeply passionate about making science simple and actionable so that you feel confident and empowered in your health decisions. This channel is your go-to for trusted insights, expert conversations, and practical tools that support real life wellness. As a naturopath, I see firsthand how financial stress can take a real toll on our physical and our emotional well-being. That's why in this special series, we're exploring the powerful connection between financial health and whole body health. Because true wellness includes your bank accounts too. Today, we're diving into a topic that's way more exciting than it sounds, which is asset classes. Before your eyes glaze over, let me explain. Understanding asset classes is like learning the different ingredients in a recipe for wealth. Once you know what each one does, like property, shares, cash, even crypto, you can start mixing them together in a way that works for you. So in this episode, I'll break down the main asset classes in plain English, explain the risks and rewards of each, and help you to figure out how they might fit into your financial future. Whether you're just getting started or wanting to invest smarter, this episode will give you the confidence to build your wealth your way. But remember, this information simply comes from my own journey becoming more financially literate. It's not professional advice. Let's get started. For each class, I'm going to give you an explanation, a pro or a con, and then what I feel is their best use. The first asset class we're going to cover is cash and term deposits. These are good for emergency cash, but they traditionally give quite low returns, which are often outpaced by inflation. Not ideal in the long term. Currently, the term deposit rates are around 4.6%, which is actually pretty good because interest rates are up at the moment. Inflation is sitting at around 2.5%. So right now, term deposits are offering real returns. I would use them to keep 3 months worth of expenses as an emergency fund. The second asset class, shares. I feel these are great for long-term growth. Dividends can provide income and they're easy to access. On the flip side, shares can be volatile in the short term. I would use them to build long-term wealth. I would always reinvest those dividends to fast-track your wealth building. The third asset class is property. This is a tangible asset with rental income potential. It could also have tax benefits like negative gearing and, of course, long-term capital growth in the right areas. The cons are that it's very expensive to buy, especially in Sydney where I am, and it can be costly to keep. There could be strata, there could be rates, the interest rate on the mortgage could go up. And it's also hard to sell quickly if you need fast money. And lastly, market cycles and interest rates can affect your returns. So how would I use them? I would use them as a principal place of residence, as the value of this is not included in your assessment for the age pension. By focusing on paying off your mortgage, you end up with a solid asset. You can also use the equity you've built in your property to purchase another property or do financial strategies such as debt recycling. The fourth asset class I want to discuss are bonds, which is basically lending money to the government for a fixed return. These are very stable. They can be useful for income, but the cons are that they are lower returns than shares. Current 2-year bonds sit at around 3.23%, which is only 1 point above inflation. I personally wouldn't use these, but if you're very conservative and maybe a bit old school, you might be comfortable to use bonds. The fifth asset class are precious metals like gold and silver. Now, these are a good bet against inflation. Historically, they are seen as a very safe place to store wealth in times of uncertainty. Over the last 20 years, gold has an average annual return of 10% when compounded, which is very good. The cons are it doesn't produce any income until it's sold and the price can be volatile. I would use these as part of that wealth portfolio and use it as part of that diversification strategy. The sixth asset class I want to discuss is your superannuation. It's a very tax effective way to grow wealth for retirement. It has long-term investment growth potential, and those employer contributions can fast track wealth creation. The cons, you cannot touch any of that money until you reach the preservation age at 65. So how would I use them? I would maximize tax breaks by making those concessional contributions of up to $30,000 a year, because these contributions are taxed at 15% instead of the usual 30%. The seventh asset class is a controversial one, cryptocurrency, which is digital money such as Bitcoin, which operates independently of banks or governments. The pros are it's decentralized, so it's not controlled by anyone, and there's a limited supply. For example, Bitcoin has only 21 million coins. The cons are the volatile pricing and how unfamiliar many people are with understanding the technology. The way I think about Z is that it's part of that diversification strategy, and it's also about investing in the future. Let's recap those asset classes. The first was cash and term deposits. The second was shares. The third was property. The fourth was your bonds. The fifth, precious metals. The sixth was superannuation. And the seventh was cryptocurrency. Now that we've gone through those asset classes, here are some questions to get you thinking. The first is, what do your current investments, or lack of them, say about your money mindset? The next is, how diversified are you really? Are you relying too much on property, on cash, or super without realizing it? The next is, which asset class aligns most with your values, such as stability or freedom or growth? The next question is, are you investing in what you understand, or are you just following the crowd? Then we have this question: how do you want your future self to benefit from the choices you're making today? Comment below and tell me the asset class that intimidates you the most, or the one you're most curious about, and then let's unpack it in a future episode. Lastly, if you want the worksheet from today's episode, simply send me an email, emma@studio-you.com.au, and I'll email it to you. Thanks for being with me today. Don't forget to like this video and hit that subscribe button below. Check out the links in the show notes for more health empowering information, and please ask me any questions in the comments.